In a class, all the students used to get somewhere around 70, 80, 90 percentage. There's a one guy called Bharat, used to always get around 40, 45 and just pass in the exams. He's the one who always take the beating from his master. So he decided that let us study for the next exam. So he attended exam, and when the results came, the shocking is he is the topper of the class, and everybody shocked that how he can be topper. Actually, he got the same 40, 45 percentage of the marks, but this time, other all the class people had failed. So same 40% when he was getting in the earlier masters to beat him. Now the same 40 marks, now he's a top performer. So everybody started increasing. So this is the same situation happening to the Indian stock market also. Let me explain you. Hi, this is Narasimha Kumar. Welcome to Akshaya Money Management for the September series. So let us see the market. As I explained, India has given 4% returns. If you say is a 4% is a very good, one of my client has called me and said that my FD is given better than your Nifty. Yes, but when you compare to USA is minus 20% in the same 1 year. It may be China minus 24%, or it may be Europe minus 15%, Taiwan minus 15%, Japan minus 6%. So when you compare to other countries, India is outperforming. So when we are positive 4%, other countries are minus 10 to minus 20% returns they're giving it. So one can debate whether 4% is good or bad, but India is outperforming. Why India is outperforming? Assuming you are the investors. When you see from the outside, which is a country you feel the safest and which is a growing country to invest, you can have a look at it. Europe, if you look into, Europe has the highest inflation ever in there, almost 20 years. If you see the Russia, still war is happening. If you want to invest in the USA, we does not know when Fed rate we want to take a decision, and that is going to impact the growth stocks. And if you see China, if you want to invest, China, I don't know when the lockdown is going to happen. So all these problems are there in and around the world. So a lot of investors feeling India or Taiwan or some small portion of the emerging markets is a safer bet than the developed countries. So that is the reason if you see India is getting the highest FIIs flow in the last month. If you till July, if you see it, FIIs were negative. From August month onwards, they turned into positive. Almost 22,000 crores came in the month of August. And September, we started with a positive note. And the same thing, FDIs. FDIs, till now, they invested almost $84 billion in Indian markets. Especially the money is coming from majorly from the Singapore, USA, or Switzerland. These are the top 5 countries where money is flowing into the Indian markets. And especially if you want to see the states where they're investing, you can see Karnataka is the highest, 37% of the money is investing into the Karnataka, followed by Maharashtra, Delhi, and Tamil Nadu. And if you want to see the sectors wise, computers highest, 24% FDIs are inflowing into the Indian markets, followed by the service and automobile sectors. So you can see the microeconomics are very strong in India. Fiscal deficit is getting improved. The fiscal deficit, nothing but your income and expenditures, the gap between that one. Last year is a reported 9.2% to the GDP. Today it is decreased to 6.8. That shows the healthy for the Indian markets. And foreign reserves, obviously when FDIs or FIIs are coming into the market, so 577 was the reported last year. Now it is increased to 633 year-on-year basis. So that is a good sign. And also we have seen the industry growth, which was last year is reported minus 7%. Today it is 11.8%. And service industry also is grown to minus 8 to almost 8.2%. If you notice, before COVID time also, it was somewhere around 7.2. We had gone ahead of the pre-COVID levels of the service and the industry levels. So there is a good sign for the Indian markets. That's why a lot of FIIs and FDIs are investing into the Indian markets. And if you see, because of all this good news, our income to the country is also increasing. The tax revenue, which was on an average If you see a 10 to 9, it is increased to 12.9%. And same thing for the and total tax to GDP, which was almost 10%, now it is increased to 11.7%. So it shows a lot of inflow in the Indian markets, or Indian growth is happening in the microeconomic levels. Yes, we have seen from the 60,000 Sensex gone down. Again, we came back to 60,000 levels. So now a lot of people are asking, are we overvalued? So this is a major, customers are asking the question. For that one, let me see. So if you see the Nifty PE ratio, the average I can say 24 is the average PE ratio. We are below the average. We are right now in 21. So that is a good sign. But when you come to the Nifty PB, means price to the book, we are ahead of the average, little bit costly. So this is a what little bit we should be one cautious, because anytime we can see the profit booking can happen in near future. So one should be ready to see this volatility will be there until unless global factors will settle. So that is the reason the big concern is the our Fed rate. So Fed rate this month, last week of this month, we have how much they're going to increase. That's what all the markets eyes are watching on. So if you see inflation, because of the inflation increasing, that's the reason they are also increasing the repo rates to control the inflation. So one good sign is that compared to last month, which was rated as 9.1%, inflation is gone down to almost 8.5%. So that is a good sign. So if Fed feel that we're in the track, they may not increase beyond the expectation. So already market is expected 0.5%, they can increase it. But if it goes beyond that one, is a problem. If you see repo rates, before COVID levels, it was 2%. It has gone down to almost zero in the during COVID time. Now it has gone above the 2.25%. So if Fed increases in a steady manner, so market can be able to digest and market will be the positive. If Fed increases maybe like a 0.75 to 1%, then we'll see a lot of volatility again disturbing in the market. We can see this is what we should everybody should watch it. And the most important, the stocks, because a lot of customers start asking why you stop the stock ideas. So again, we are starting with the stock ideas. So I want to give you two stock ideas where in the meantime, when the markets are gone down, it has taken a very good beatings. So now Tata Alexi, so which was rating around 10,500 per share, now we are getting for 8,900. So this is the stocks you can look into to keep in your portfolio. And next sector is a chemical and fertilizer. GNFC, you can see it. Again, this is also somewhere highest is 920 to 940 levels it was there. Today, you're getting at 770 levels. So these stocks, these two stocks you can look into and you can invest into your portfolio. So hope this video was useful for you. Thank you for watching Akshaya Money Management. Let us catch in the next month series.